Good morning, and welcome to W5 Solutions year-end report presentation. I'm joined today with CEO Daniel Hopstadius.
Good morning.
Good morning, Daniel. Could you summarize the development of the fourth quarter?
Yes, if we summarize this, it has been a very hectic quarter. As you remember, our last quarter report, we said that we're gonna make deliveries for 70 millions. We have overachieved, so we delivered at 78 million. A great effort, and that means that this is our strongest quarter historically ever. We have also put up a new company in Finland, W5 Finland Oy, and they have also acquired parts of a company, Nasdaq Eiko Oy. So of course it has been really hectic. So now we are a Nordic group through the creation here of our Finnish subsidiary. So it has been a great but really hectic quarter.
Daniel, could you get a little bit more in-depth with the financials of this fourth quarter?
I would like to start to tell you about the growth, and we're showing strong growth. Our revenue amounted to 78 million, actually a little bit above 78 million, as I mentioned before. We have a growth of 43%, and I would say most of that is also organic growth, about 85%. The profit for the quarter, measured on the EBITA level, is 8 million, and that's an increase of 233% compared to last year. And if we look at the whole year, we can see we had a revenue of the year for about 180 million. That's a growth rate of 25%. And the profit on EBITA level was about 28%, from 15.6 million then to 20 million. So if we make a conclusion of that, we have an outstanding year.
Thank you. And does the strong order intake, does it look likely to continue?
Yes, it will continue. Sales continue to develop strongly, and we had an order intake of 80 million during the quarter. This given we get an order book, a total about 192 million at the end of the year, and that's also an increase of 10% from the last year. And if we look ahead, we can see that the demand from the customer side is increasing a lot. So we're looking for a very positive forecast for our sales.
And obviously you've grown, you've improved the profit, and you've continued to win new orders. How have you succeeded in doing this?
I would say I have to thank you, our wonderful, amazing team behind the delivery to our customers. Without them, this hadn't been possible. So we have managed to keep what we promised by being flexible, able to make quick changes in what we deliver, and very important is to make the right priorities. I would say also we have increased costs due to the inflation and the delivery issues that still is around. We have succeeded in raising the margins, and if you see for that for the future, there's improvements to make into the margins in the future.
But doesn't that mean you've worsened your margins?
That's absolutely right. But we have prioritized our deliveries over short-term profit in a single project. And of course, that does results in decreased margins. But our ambitions is to have a long-term horizon and to become an important part of the Nordic defense and support the defense capabilities. And our ability to actually be able to deliver has led us to receive 2 further orders from a Nordic customer within the live fire segment. So I do believe that's the right strategy to go with.
You have entered into new partnerships. Can you describe a little more closely of?
Yes, we have established a new strategic partnership with a US company, Shield AI. They are leaders in autonomous drones with AI capabilities and offers one of the market's best solution to unmanned tactical flight systems. Here we have a high expectation thanks to increased demand on this market. With them as a partner, we can deliver flight system to our customers that are well suited to the Nordic regions. You know, there's a harsh region, harsh environment. So they can manage to cope with the Arctic conditions.
In the report, you write that the company is well positioned for continued profitable growth. Can you explain more about that?
Yes, it's very true that we have great possibilities for the upcoming year. We have already, as you can see, we have acquired another company. That's Arcor AB. They are specialized in power supply. They are leaders in rugged batteries, chargers, and power banks, especially suited for extreme environments. And through this acquisition, we have also added an additional 100 million into our order books, into the group. And if we combine these with our numbers, we're now close to 300 million in our order book. We also expect, as I mentioned before, the sales to increase, and also we could do that with increased margins. And if you look for the whole year, it's our estimated growth is about 25% for the organic growth. And if you look for total growth for the whole group, we estimate that to be approximately 75%, and that's included with acquisitions. So with that said, we're very well positioned to keep on this growth journey.
And the future? I mean, you know, this is the end now. This is the end with Q4. So how does the future look?
It's look bright. Due to the fact that the increased readiness and rising budgets into the Western Armed Forces, we can see they have raised their budgets, and that of course will mean that we will sell more of our products. And we are only at the beginning of our growth journey, and in 2023 you will see more and better results from our investments and the initiatives we take this year. And taking into account the good development, we are, as I said before, very well positioned to reach our long-term targets. That is to reach 500 million with 15% EBITA margin at 2025.
Thank you, Daniel.
Yeah, thank you very much.